Hare Krishna. Welcome to Tax YouTube channel. This is C. Rohanar Pingai, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series on concurrent audit of bank branches. And today is session 70. And we will going to discuss on the topic internal controls and compliance. So let's dive into it. Let me allow to share my screen. Yes. So in our previous session, we have discussed frauds in banks from the auditor's perspective, where we understood fraud typologies, early warning signals, and red flagged accounts, fraud reporting expectations, and the role of the concurrent auditor in a prevention and vigilance. So in today's session, we move into another foundational pillar of banking governance. And what is it? Yes, internal controls and compliance. So banking operations function on a framework of trust, but trust alone is what not never be sufficient. Banking requires strong systems, disciplined process, effective supervision and compliance monitoring and independent audit oversight. So even the most well-designed banking policy becomes what ineffective if branch level execution is weak. But right? So a branch may have excellent lending policies, sophisticated CBS controls, strong risk management manuals, detailed compliance circulars, but if operational discipline is weak at branch level, then control failures emerge quickly. So this is why internal controls are not merely procedural formalities, but they are the backbone of what banking governance. So for concurrent auditors, internal controls and compliance monitoring are among the most significant areas of review because the objective is not merely transaction checking, but prevention of operational lapses, risk containment, and early corrective intervention. So in this session, we will discuss or we shall discuss relationship between the concurrent audit and the internal financial controls framework, compliance with RBI inspection observations, branch inspecting reporting, follow-up system, and escalation protocols for serious irregularities. So let's start with it. Importance of internal controls in banking. So before discussing audit specifies that let us understand why internal controls are critically important in banking. Not only banking sector, in every possible, every industry, every sector, it is necessary. But today we are going to discuss as per the bank point of view. So banks operate with a public money. Unlike many businesses where owners largely bear business risks, bank manage depositors' funds, borrowed funds, shareholder capital, and interested assets. Therefore, every weakness in an internal control has wider consequences. So, internal control helps in what? Protection of assets like cash, securities, collateral, customer balances, documentation, then prevention of errors, incorrect postings, misclassification, reclassification failures, fraud prevention, maker, checker controls, access restrictions, transaction approvals, under compliance assurance, adherence to the RBI instructions, internal policy, internal circulars, legal requirements. Under operational standardization, branches must operate uniformly despite what geographical spread. And then reliability of the reporting, the management decisions depend on accurate data. So weak internal controls often result in financial loss, fraud opportunity, reputational damage, customer disputes, regulatory criticism, audit qualifications. So concurrent audit serves as what? Continuous checkpoint here. So this continuous checkpoint over this control environment. So that is the very much important as a part of it. So moving further, let's understand internal financial control. So internal financial controls commonly referred as what IFC, right? Internal financial controls represent the framework of policies, procedures, approvals, system controls, monitoring mechanism, and governance practices that ensure what sound financial and operational functioning. In practical banking terms, IFC means transactions are properly authorized, entries are accurately recorded, assets are protected, liabilities are correctly recognized, reconciliations are made on timely basis, unusual transactions are reviewed, and exceptions are investigated. So we can let's see have examples authorization control. So who can approve, who can verify, and what is the limit also approval limit. Then segregation of duties. One person should not initiate, approve, and complete the same transaction. Maker checker should be different. So system controls under that CBS validations, maker checker workflows, approval matrices, under reconciliation controls, cash, suspense, enter branch, ATM closing, and under documentation controls, sanction letters, KYC, securities, legal records, and what come under monitoring controls, exception reports that are daily generated in a CBS. Most of the CBS exceptional reports are generated. So as a concurrent auditor, we must review and also noting to the branch administrative staff, those who are concerned staff at a managerial level or whatever, we need to bring out notice to them whether they are know through this or not. So daily exceptional report review is necessary. So supervisory check also necessary. That need to be checked. So concurrent audit evaluates whether these controls exist and whether they actually work in practice. We need to means most of the branches there are many reports generated in CBS, but the staff who are working there they are also not known if these reports are generated. So as a concurrent auditor, we must study what reports CBS are generating, and then while going through those reports, what is the importance of that reports and whether the branch official knows that, and if they know what actions they are taking on those particular reports. So these are the steps and these need to be analyzed. So that need to be taken care of. Means it is an experience. Most of the branch officials don't know many times what reports are generated in CBS, and if they know, they don't take action. So that is the experience. Next, so concurrent audit as a control monitoring tool. Let's understand this. So concurrent audit is not merely a transaction verification. Our role is not only limited to the transaction verification. It is fundamentally a real-time internal control monitoring mechanism, we can say. Traditional auditors often review what past events, but concurrent auditor, however, works much closer to the transaction timeline. Means transaction happens, we either check on that day or the next day. So this makes it highly effective. So concurrent audit contributes by what testing controlled design. Is there a control framework? If it is there, whether any there lapses, we need to check. So maker checker actually required. If it is not, if it is there, but how much it is implemented, correctly implemented, we need to review. Then testing control effectiveness. Is the control functioning, right? Are checker approvals meaningful or mechanical, as I said? Identifying the process gaps, that is manual overrides without justification, detecting repeat exceptions, that is one isolated lapse may be error. Repeated lapses indicate what control weaknesses. Then prompt escalation, early reporting helps what timely correction. We need to immediately report if there is identification from the branch officials, anything error or somehow happened, we need to bring to the notice of the branch manager. So concurrent auditors therefore strengthen the internal financial control system through continuous vigilance. Let's see key control, high risk internal control areas. So key branch control areas requiring what audit focus on cash controls. Let's see cash retention limits, how much limit is there and whether daily it is manage means they whether the cash retention is done correctly, means the cash transaction is under retention limit or it is exceeding. Means as a concurrent auditor we need to report. Many concurrent audit reports have that particular. We need to report whether the exceeds cash retention limit, and we mentioned that particular day with this or that day the branch has exceeded the cash retention limit. So dual custody, vault access, balancing, surprise verification also need to be done. Then under deposit controls, account opening documentation, KYC is most important. Document accounts, unusual withdrawals, closure procedures need to see if there are number of closure increases in a single month. We need to go and see why accounts are closed so much. Means why the numbers are increased. We need to go inside in deep that particular area. Then loan control, sanction compliance, documentation completeness, DP calculations, insurance, in-use checks. Means while checking the loans and advances, the sanction terms and conditions, we need to read each and every term and condition of sanction letter and see whether that is complied or not. Before and post sanction terms and conditions are there, so we need to check. If it is a post, then we need to see whether the follow-up is doing or not correctly by the branch level. So the sanction terms and conditions of the sanction letters are very much important. Then CBS controls user rights, password discipline, override usage, maker checker integrity. Means many times happen is that they exchange your passwords at a branch level in between of them. So we need to see also that means why they are giving or not, or means if it is given, if it, then it is changed afterwards. We need to see also that. Then suspense control, suspense accounts often conceal unresolved issues. Then under reconciliation controls, unreconciled balances what creates risk. So need to see the accounts are timely reconciled. Concurrent auditors must identify not just errors but control design weakness. That is important. Means we not only find out errors, but we go beyond that and we need to see if there is a weakness in a control design. If it is, then we need to just suggest to the branch, first branch level and then at a zonal office level if required. Then next, let's understand RBI inspection report compliance. So RBI inspections are highly significant. Inspection observations reflect what supervisory concerns regarding the compliance, control, asset quality, governance, customer service, risk management. So when RBI raises observations, the expectation is not cosmetic compliance. Banks must analyze root cause of it, implement the corrective action, then fix control weaknesses, prevent the recurrence, and monitor the closure. So for branches, relevant observations may involve documentation deficiencies, KYC failures, irregular advances, reconciliation delays, unauthorized operations. So as a concurrent auditor, we should verify whether applicable inspection observations have been genuinely been addressed. Means we need to see after that audit whether as per the findings of that particular audit report, we need to see whether the compliances are done by the branch officials. Let's moving further, auditor's review of RBI compliance. Let's understand that. So concurrent auditors should not rely solely on the management assurance. Practical verification includes ask, has corrective action actually happened or not? We need to verify that. If RBI observed overdue reconciliation, check actual pending items. If KYC gaps were noted, then sample current accounts need to be verified. If documentation deficiency were highlighted, we need to verify the document completeness. If irregular loan monitoring was criticized, then check current inspection controls or records. Then key audit question is compliance genuine or merely reported? Means we need to see only the form as a formality branch officials replied on the report of the RBI, but whether they have taken the corrective course of actions on that particular RBI audit report. We need to verify that. So repeat observations are especially concerning what? Because they are indicate weak compliance culture. Moving further, let's understand branch inspection observation. Branch inspections by internal teams often reveal the practical operational issues. Means internal control audit by the branch official of particular areas also taken or also done by the branch officials by zonal or by other agencies. So common observations, delayed balancing, incomplete vouchers, KYC deficiencies, pending confirmations, overdue renewals, insurance lapses, documentation deficiencies, suspense pendency, unauthorized deviations. All these areas are also covered in the concurrent audit of monthly concurrent audit of the branches. So these are also means there are some of the areas that can be a repetitive, but the nature of responsibility, the nature of deep testing or verification is the role will be different. So we, as a concurrent auditor, we need to see that the compliance against that internal audit reports also. So concurrent auditor should understand the past observations because recurring weakness often remain unresolved. So a branch repeatedly cited for the same issues indicates what? Poor control disciplines. So let's see concurrent audit follow mechanism. Let's understand that. So concurrent audit reporting must not become a repetitive documentation exercise. A meaningful follow-up mechanism should include. We need to take up the follow-up very seriously because what happened many times we issue monthly concurrent audit report and then we again start with the next month audit, but we didn't take a follow of we whether whatever we have observed or whatever observations we have uh, produced in that particular previous concurrent audit report, whether that on action on that particular part is taken or not. We need to see that. So a meaningful follow-up mechanism should include what? Observation register, maintain issue tracking, then aging review, how long unresolved, then responsibility mapping, who must act on that particular and whether concerned person acted or not. Closure validation, is evidence available or not? And then repeat observation flagging, the recurring matters and need to escalate again. So audit effectiveness depends not just on reporting, but on closure monitoring also. That is the review of the previous observations. Then let's understand escalation framework. So some matters require immediate escalation. So example, suspected fraud, forged documentation, unauthorized high value transactions, major control bypass, suspicious customer activity, serious regulatory breach, system misuse, repeated management inaction. So concurrent auditor should follow what reporting protocol. Delay in escalation can magnify the risk. So documentation must be factual, objective, and evidence-based. Let's see red flags for concurrent auditors. So practical red flags include what? Frequent same exceptions, repeated suspense entries, unexplained manual intervention, missing approvals, incomplete vouchers, unsupported reversals, access right anomalies, unresolved customer complaints, delayed balancing, stale reconciliation. So the patterns matter more than isolated errors. Moving further, let's understand auditor boundaries and judgment. We can say as a limitation. So concurrent auditors do not replace the branch manager. Please keep in this point. We are not replacing the branch management. However, limitations do not reduce our professional responsibility. So wherever evidence suggests weakness, skepticism is essential. Never rely blindly on the verbal explanation. Everything should be noted down. Every should whatever communication you want to make it or take it need to be conveyed through emails. Should not be, it will not be orally. Let's see some illustrative scenarios. Under first scenario, KYC deficiencies reported repeatedly, so no closure, control culture issue. Then suspense unreconciled for months to month, operational risks, repeated overrides by same staff, access control concern. Then inspection observation closed without any evidence, so false compliance risk. So what we can conclude from today's discussion is that internal controls are not static manuals. They are living systems requiring what discipline, monitoring, accountability, and correction. So compliance is not merely responding to the observations. It is building what sustainable control culture. Concurrent audit adds value when it detects the weakness early, validates the corrective actions, follow up unresolved issues, and escalate serious concern. Please keep in mind these 4 points. Detect weakness early, validates the corrective action, follow up, and escalate serious concern. So a strong concurrent audit function protects not only bank but depositors also, governance and public trust. So thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp, email, or you can also comment below the video. So if you have not yet subscribed to Tax YouTube channel, then do subscribe for latest updates and video series like this. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on a Tax YouTube channel. So stay tuned to the Tax YouTube channel. Thank you so much. Bye bye. Take care. See you soon. Hare Krishna.